Hi, this is Kelly Davis, and I'm bringing you my monthly market update for February of 2023. I'm going to talk about three things today: interest rates, inventory, and some headlines that are misleading consumers. So starting with interest rates, I mentioned back in my January update that rates had dipped down into the fives and that we had expected it to kind of stay in the fives for the rest of the year. Unfortunately though, coming to February and in the last couple weeks, rates actually surged and they are back in the 6.5 or high sixes range. So while that's not the direction that we were expecting, all of the experts do agree that as a whole, rates are on a downward trend. If you take a look at this graph, you can see from November of 22 to today, rates are coming down. However, this graph doesn't really show the full picture of what's going on. It doesn't show that it actually hit 7.5% in the fourth quarter, and it doesn't show the fives that we hit in January. And that's because these snippets or averages on weekly isn't showing that we're really more volatile than that. Rates are going kind of up and down daily. So while rates are, they were 5% and they were 7.5% in December, all the experts agree we shouldn't hit 7.5% again. It should hopefully come back down into the fives. But I will say that if you are buying, timing is going to be a really big factor in when you lock your rate. Outside of interest rates though, I think the bigger issue that we're facing right now, especially here in Loudoun County, is just really low inventory. Inventory is the lowest it's been, continues to be low, lowest it's been in 5 years. And here in Loudoun County, you can see the graph, we're actually down 11% from January of 2022. And that graph, it actually breaks it down even further. So if you look at this, you can see most cities were way down, with the exception of Aldi. Here in Aldi, we were actually up 40% in listings, and Lovettsville, you can see, was up as well. And while those two cities were up and the rest were really, really down, I would say on a whole though, there is still a lot more demand than supply. Even in Aldi, where listings are up, we've actually found that houses are still going under contract with multiple offers, and going under contract the first weekend. So interest rates should settle down, but if we can't have the inventory and the inventory doesn't pick up, we're going to have a really hard time going into the spring market. In addition to these two things, I'd say the other issue that we're having right now is that there's still a lot of people out there that believe we're headed for a crash, and they don't want to buy, they don't want to buy a house when they think we're at the height of the market and then lose money day one. But there's a lot of reasons why that's not going to happen, but headlines right now are doing more to terrify than clarify. You can see these headings out there, U.S. foreclosure filings surged 115% in 2022. And then some of these other headlines. But what's really funny about that is basically foreclosures were zero in the past couple years based on the government mandates. And even though those mandates have been lifted, we're still well below pre-pandemic foreclosure records or levels, sorry. So, if you think about it, the double of 1 is 2, and that's 100% increase, but 2 by no means is a surge in, foreclosures. Here in Loudoun County, we had 9 foreclosures in January and 4 short sales. So if you think about the fact that we had over almost close to 400 listings, that's still a really low percentage of houses that are, being foreclosed on or, sold for short sale. So I would say in summary, on a whole, yes, the market is slowing down. Homeowners feel interest rate locked, sitting on a 2 or 3% interest rate. They don't want to move. First-time home buyers are having a hard time getting an accurate assessment of what their monthly payment will be with the rates being so volatile. Then you have these, headlines out there that are scaring Americans into believing that this market slowdown is a lot worse than it actually is. But that being said, demand is still, bigger than supply, especially here in Loudoun County. So as long as that happens, I think we'll be fine. So with that being said, that's my market update for February of 2023. If you have any questions, feel free to reach out to me. And if not, I will catch you next time. Thanks.